Hello everybody, this is a trend scan for the year 2022. So we're in January. Let's have a look at the higher time frames and where different asset classes might head into. Now let's have a look at US equities. So US equities are in a vertical market, right? So we're going vertically up without a major pullback. We only have here on the quarterly chart a small one red bar pullbacks. Same on the monthly chart, small pullbacks. It's a micro channel, a very strong uptrend. Well, this is resting on this pattern. This is an S1 pattern that has triggered. Well, that should be the month of April, yeah, because this is the March 2020 test bar spike. That was the height of the panic, the Corona panic, and this triggered an entry here, right? So this has really, used the momentum that was put into the market. This short momentum, well, this was released to the upside, and this is what we see here. But the air is getting thinner and thinner. The more vertical we go, and the further apart, stretched apart we are from the moving average. Well, I got out of a long-term position. Pyramid position. Well, when we saw here on the daily chart, when we saw this strong push down, this is here on the weekly. This when the 21 was strongly tested, we got a new low. So I got out basically, and then it made a new high, and there's a new consolidation on the daily. But it's not a consolidation that popped into my eye as being something very great or a great low risk idea. It's basically going sideways and making a new high. So it's not something I'm looking for. So I'm getting cautious here, right? We're at thin air, and this might be not something tradable, right? And we might not see a follow through coming here, but we are in a sideways consolidation. Well, same here with the ES, right? It's not a pattern that is familiar. It immediately broke to a new high. So what is missing is this sell-off, and this makes me very cautious. Again, here it's even higher, right? It's even thinner, the air we're seeing here. It's even worse for the Nasdaq. Nasdaq, well, this is how a vertical market in its purest form basically looks like. Let's just wait for it. Okay, this is going straight up, right? We don't have any red bar. Well, this is the current bar. It's still red. Well, it could turn green, but we don't have any pullback, and pullbacks are going to come. Well, this is the closest to be a pattern. This looks like an S1 pattern, right? Well, looking at that, well, we should see a strong sell-off and then a strong recovery. If we don't get that, well, I'm rather assuming, well, that we're actually seeing a more pronounced pullback. And we could easily drop from here from 16,000 to 10,000 and still being a strong uptrend. So pulling back to the 21 in a strong trend is always healthy. Now let's have a look at the EMD, because the EMD is here is plotting a pattern. It's plotting a pattern on the weekly chart. No, was it the RTR? 1 second. Yeah, sorry. It was the Russell, right? The Russell is plotting here a pattern on the weekly chart. That's an S1 pattern. We've got a really strong horizontal base here. But in order for the rules for this S1 pattern to be fulfilled, well, it needs to drop to the 2000 level. So there's quite a bit of bearishness ahead. And let's see. Well, we're looking for bearishness and a quick recovery, bullishness, right? In order to see to get this into bullish territory. I rather think we get a rotation, asset class rotation. That money is getting out of US equities and into energies and metals. So the energies, well, let's start with the energies, because the energies are the most bullish asset class right now. So this is crude oil. With crude oil, we saw a big drop, right? So it dropped from around 83 down to 60. So that's a big drop, but we are in a nice uptrend. So this down here, this was a panic selling, right? Where crude went went below that $10 level. So since then we have recovered nicely. We have run through some very important, well, these are stop run levels. This is another very important level. So we are right here at the moment, and then we are basically shooting for the $100 level and the 200 moving average, which clusters with the 200 moving average over here on the quarterly chart, and there's room towards the 120. So what makes me passionate and bullish about crude is, well, that after this strong drop there's a quick recovery, and now it's breaking to a new high here on the daily chart. Well, it's not only on the daily new high, it's a new high on the weekly chart as well. And once this is cleared, well, we're right there, right? We're going to see how the market is opening. Today's Sunday. Well, if this gets cleared, well, there's an immediate next stop run level, slightly higher. We could actually see a quick move here from 84ish towards 100 and 120. So trading lower time frames, well, there's a lot of potential in here. We can see how nicely how the trends have established themselves. Very strong and smooth trend. Well, this is a super trend, etc. Now, crude oil is bullish, but heating oil is even more bullish. So why is that? Well, it's front running crude. It has already broken to a new high. It has already, well, there was a test here on the monthly. There was a test of 200 pullback, and now it has rebroken. So it looks like the bulls have gained over the 200. That's a double top basically. And again here, well, we're running for stop run levels, and there's a lot of room to go. Same for gasoline. Gasoline is front running as well. Crude, it has slightly broken higher, and it really looks very bullish right here on the right. So okay, well, we had this S1 pattern, right, running off, and now we're actually looking to break to a new high. So the new high is around here, 2.5, and we're very close, right? So basically gasoline is shooting for a new high coming out of this S1 pattern. Now, talking about energies, natural gas was always a great trading contract, because it's very well tradable long and short. We basically had this bull bear power play back here in beginning of 2021. That was a bearish pattern. Well, it didn't show any follow through, and typically when you get a bearish pattern that doesn't work, well, it's a counter trend signal, and that's what we got here. We got a big counter trend move, right? That's clear in a downtrend. We had a big counter trend move as we had before as well, and it's basically testing here the 21 on the quarterly chart. Well, natural gas is one of the few contracts that are not yet, like of all those global contracts, that are not yet in an uptrend. And I think we have marked the low here, and we should actually see natural gas getting into an uptrend. Well, there's a lot of room to go, right? If you talk about $4 here and it goes towards the 30-35 mark, well, there's a lot of room to go. Well, this will struggle a little bit, as we already saw here. Big up move, big down move, and we have to see, I mean, here on the daily, right, this down move, there was a base, so now it's a breakout of the base. So this is a typical bull bear struggle, and I'm looking for taking a longer term investment position long in natural gas, like with an ETF, for example, because I think we might have seen the bottom, and trading opportunities, well, they will come up in lower time frames, not in these, right? Because that's still these charts are still bearish and they're still struggling. But we could get a low risk entry long in the lower time frames. Right, so there might actually be money moving out of US equities and into energies, right? So we could see US equities drop while energies increase. Well, same thing for metals. We might actually see money getting, that might be an asset class rotation. We might actually see money getting into metals, right? Here, precious metals, gold. We had seen this big up run. That was a clear pattern entry on an S2 here on the monthly. Well, since then, it has broken to a new high, new all-time high. Well, since then, we are in a pullback mode, right? And it's nicely coming back and testing, finding support with the 21 moving average. The bars are getting smaller and smaller, so we're in a volatility contraction. So we see patterns coming up. We had seen an S1 pattern, so now it looks like an S2 is forming. We see higher highs and lower, sorry, higher lows and lower highs, right? So we have stop run levels on both sides, on the bottom here and on the top. So we might actually see a final sell-off before this consolidation is over. We might see a sell-off and then a quick recovery, and then this would be a great, long entry signal. Similar silver. Same is consolidation. It's a different pattern. It's more like on a horizontal base. So that looks like an S1. But there's a lot of, I'm very bullish on silver because this is the pattern, well, this is the move, and we can expect a similar move, right? So this is basically tripled. We can see a similar move. So a tripling, well, that would bring us to the all-time high at around $50. So there's a second leg, first leg pullback, second leg that should actually show more follow through than we had, more activity long than we had seen here, and that was a beautiful, I mean, that was a fantastic a couple of months trend to be traded in lower time frames, right? That was a beautiful. Now let's have a look here at interest rates and interest rate futures. So the interest rate futures are still long-term in an uptrend. So in an uptrend in interest rate means that the yields are getting lower and lower for many years now, right? And this hasn't turned around, this uptrend. It's just coming back and testing the 21 moving average. However, there's some note of caution. Well, I had plotted out here this S1 pattern, and I was waiting for a rebreak. Well, the rebreak never happened. And if the bulls cannot bring in the strength, well, what typically happens is that the bears get confident and win a nice battle. So that's what we've seen here. No rebreak. There's a sell-off, right? So these are the first signs potentially that interest rates are getting into a downturn, but we are not there yet. Now the 30-year US T-bill is the closest chart that would make me believe, oh, we might actually see that we might actually have seen the high, right? This bar here, this monthly bar, it's a rejection bar, right? It's a big green bar and a big bottom top wick. It's a rejection bar, and this, if you look back in hindsight, in a couple of years from now, where we could actually identify this to be the highest high, the end of this uptrend. Well, why is it so interesting to look at downtrends here? Well, whenever we get a downtrend, well, we'll actually see yields increase, and increasing yields mean that government bond holders, well, they will lose with their investment, right? And the most they fear is increasing yields over a long time. What will happen then? Like if we develop into a downtrend, well, what will happen then is that a lot of government bonds are thrown on the market because of fear of loss of capital, like pension funds, family offices, etc. funds. Like if we see that money gets out of interest rates, this government bond bubble, which is the biggest bubble there is, right, in this world. If we see money flowing out of it, well, this will fuel all other asset classes, and this is when we will actually see uptrends be on fire. Very similar to what we've seen in US equities. So this is just, we're in an early stage. If we turn into a downtrend here on interest rates, well, we'll see metals, energies, and US equities get on fire. But I think we would rather see a drop in US equities and then let interest rates turn around and develop some downwards momentum. Well, this might be mid of the year or towards the end of the year. And 2033 might actually be a year with increasing yields. And then we will see, these other asset classes become very bullish. So the last contract to look at, well, let's have a look at the US dollar index, the DX contract. So the US dollar index, we've got a very bearish pattern here on the quarterly chart. This is another very dominant rejection bar that comes from the corona fear bar. So we have seen this run down, well then a pullback, right? Pullback to the red base and to the 200. So it's nothing special. Well, what is special now? Well, we want to see what happens. We should actually see follow through to the downside, which means that the US dollar gets weaker and weaker. If it develops momentum, well, these are the stop run levels, and breaking the consolidation low again here with the weak dollar, well, we'll see other asset classes getting on fire, especially the precious metals. So the next immediate thing is the weekly chart. We've got another S1 pattern and there's a breakout, and I'm basically looking for a rebreak, right? This is an important line for a rebreak. If it rebreaks, well then I'm more confident that we'll actually see continued US dollar selling weakness. So this is it. We're still a little bit in waiting, right? Waiting position, but it looks like 2022 looks very promising for nice uptrends. Thank you.